Luxury today isn't just about lifestyle, it's about smart investment positioning. Year after year, Dubai has consistently outperformed itself, and 2024 was no different. Transaction volumes reached new highs, deal sizes grew larger, and demand in the luxury segment continued to accelerate. Hi, I'm Rakhi from Xperience Realty. If you're considering luxury investment in Dubai, this is your full spectrum guide. As we move into 2025, the question for serious investors is no longer if Dubai deserves their attention. In fact, the question is where the capital should be deployed to achieve the most meaningful returns. We'll cover in this what's driving demand and market trends, the price growth and other financial data from 2002 to 2025, smart investment strategies to gain maximum returns, the most in-demand luxury communities, and the top projects to watch in 2025. Let's start with what's driving demand and the trends. This city has positioned itself as a wealth magnet for ultra HNIs and HNIs. It's the result of increasing global investor confidence and a limited pipeline of luxury assets. Dubai's luxury property market has firmly established itself as one of the most dynamic and resilient high-end real estate destinations globally. Based on data from the Henley Private Wealth Migration Report 2023 and supporting figures from Knight Frank and industry analysts, here's a snapshot of HNIs and ultra HNIs migrating into Dubai. The HNI and ultra HNI net flows into Dubai from 20 to 24 are: in 2020, the inflow of HNI was 1,300. Despite the pandemic, Dubai remained open and attracted wealthy migrants. In 21, 3,500 inflow of the HNIs. Post-COVID recovery, digital nomads, crypto-rich inflow. In 22, 4,500 inflow of these HNIs. Surge in European and Russian HNIs and ultra HNIs post-conflict. In 2023, 5,200 inflow of the HNIs. Dubai ranked number 3 globally for the HNIs and the ultra HNI migration. In 24, 6,700, which is a 400% increase versus 2020, driven by golden visa reforms and zero income tax. The projected HNIs and the ultra HNI migration from 25 to 30, according to Henley and Partners and market forecast, says this city is expected to consistently attract 5,000 to 6,500 HNIs and ultra HNIs annually through 2030. By 2030, Dubai could host over 65,000 plus resident HNIs and ultra, up from around 55,000 in 23. The number of them, net worth of $30 million plus, is projected to double by 2030, driven by private banking growth, asset management hubs, and legacy family planning. What's driving this sustained momentum? It's not coincidence. It's driven by lifestyle seekers, long-term residents, geopolitical neutrality, social stability, capital preservation, and Dubai's strategic global position. Add to this rising investor confidence and a limited supply of these prime assets. Dubai's luxury property market has firmly established itself as one of the most dynamic and resilient high-end real estate destinations globally. The city's high-end real estate market has seen significant growth in transactions, which are over 37 million dirhams, in dollars about 10 million. In 21, there were 93 such transactions totaling 84.8 billion, and by 24, This increased to 447 transactions, reaching 27 billion. This represents a 381% rise in transaction volume and 445% increase in the total sales value over 4 years. The numbers indicate a growing interest in Dubai's luxury property among high net worth buyers. Investor confidence is backed by strong fundamentals, the 2033 economic agenda and Dubai 2040 urban master plan. The pro-business policies, long-term visas, stable macroeconomic framework, increasing population, robust tourism sector and continued infrastructure investment, creating a fertile ground for sustained growth. Now let's talk about the price growth and the other financial data from 2002 to 2025. If you had invested in a luxury villa or an apartment 2 decades ago, how much would it be worth today? Based on verified data from Property Monitor, here's the table showing breakdown of both absolute growth, annualized growth percentage, and CAGR percentage for each area, from its starting year to 2024 for some of Dubai's top luxury neighborhoods. While this video may not cover each detail of the column, feel free to pause and review the key parameters. Jumerirah, if bought in 2002 for AED 735 per square feet and kept for 22 years, would today be at 5,400 dirhams per square feet, which is an absolute growth of 635% and CAGR of 9.5%. Annualized growth, 29%. Emirates Hills, if bought in 2002, 185 dirhams per square feet for 22 years, would today be at 4,100 dirhams per square feet, which is an absolute growth of 2,116% and CAGR of 15%. Annualized growth, 96%. Bvlagri Island, if bought in 2014, for 1,800 dirhams per square feet and kept for 10 years, would today be at 8,300 dirhams per square feet, which is an absolute growth of 361%, CAGR of 16.5%, and annualized growth of 36%. Bluewater Island, if bought in 2018 for 2,200 dirhams per square feet, kept for 6 years, would today be at 4,800 dirhams per square feet, which is an absolute growth of 118% and CAGR of 14%. Annualized growth, 19.5%. What does this mean for your return on equity? My key takeaways: established communities like Jumerirah offer consistent long-term growth. Newer branded assets like Bvlagri and Bluewaters deliver faster appreciation in shorter cycles. Emirates Hills remains a standout, combining legacy, location, and ultra HNI demand to deliver extraordinary long-term ROE. Now compare that to the traditional assets of CAGR. Global REIT 6 to 9%. S&P 500 index 10 to 11%. Dubai luxury real estate Jumerirah 9.5%. Emirates Hills 15%. Bvlagri Island 16.5%. Bluewater Island 14%. My conclusion: Dubai's luxury real estate is about vision, timing, and transformation. Those who entered early and held long won big. The next segment, real estate as a capital preservation tool. Dubai's luxury sector has proven resilient through crisis and has gained increasing global credibility, making it not just an investment, but a store of value. This city's real estate has evolved into a reliable capital preservation vehicle for global investors. Backed by a dollar-pegged currency, zero capital gains tax, and strong legal frameworks. It offers a secure environment for safeguarding wealth. For ultra-high net worth individuals, investing in Dubai property not only hedges against inflation and currency risk, but also provides access to residency, lifestyle, and long-term diversification. The next segment, smart investment strategies to gain maximum returns. Like I just said, launch timing still matters. It means spotting undervalued locations before the headlines do, like Palm Jebel Ali or the Oasis or the Grand Polo launched by Emaar, which was done recently. Think about Bvlagri Island in 2014. Units were going for 1800 dirhams per square feet. Fast forward to now, they are trading over 9,350 dirhams per square feet. That's not luck, that's timing. Now flip the lens. When do you exit? Holding forever might feel safe, but if your asset has doubled in 5 years, is that capital still working its hardest? Maybe not. This is where reallocation comes in. Take profit from a ready asset that's peaked and reinvest it into an early stage launch with higher upside. Or just sell before the handover when prices spike from end user demand. That's your pricing edge. And don't ignore the secondary market, that used villa. It might be sitting in a community with tight supply, long-term appreciation, and zero construction noise. Sometimes that's where your real margin sits, if you know where to look. The next segment, the most in-demand communities in the luxury segment. Location is everything, and last 4 years made it crystal clear which areas are leading. Palm Jumeirah led the ultra-luxury space with a 29 billion in sales during the 4 years, accounted for nearly 40% of all the 37 million dirham plus transactions. The signature villas and direct beach access have made it a global ultra HNI magnet for over a decade. Jumeirah Bay Island delivered 6.6 billion dirhams in transactions, anchored by the Bvlagri brand, one of the most expensive price per square feet areas in Dubai, with extremely limited supply and near zero inventory. Emirates Hills generated 5.9 billion dirhams in high-end villa transactions. Mohammed bin Rashid City and Dubai Hills Estate each posted 4.4 billion dirhams in sales. Tilal Al Ghaf hit the 3.7 billion mark, largely from branded villa launches like Harmony and Elysian. A rising star for capital appreciation and end-user demand. Palm Jebel Ali already clocked 2.9 billion in launch phase transactions. It's positioned to be Dubai's next flagship waterfront address, still in the early value curve. Business Bay, Downtown, Dubai Water Canal each remain steady at around 1.8 billion to 2.2 billion in transaction value. The Oasis by Emaar, still new but already crossed 1.5 billion dirhams in launches. With larger plots and high-end branding like Address and Palace, it's being positioned as Emaar's new Beverly Hills. From mature icons like Emirates Hills to rising stars like Palm Jebel Ali and the Oasis, Dubai's luxury map is evolving, but the principle remains. Waterfront, branded, and rare continue to demand the highest premiums and deepest demand. The next segment, the top projects to watch in 2025. When it comes to smart investment in Dubai's luxury real estate, 3 names are dominating conversations in 2025. Palm Jebel Ali, the Oasis by Emaar, and Bvlagri Island, also called the Jumeirah Bay Island, and the recently launched Polo Club by Emaar. Let's start with Palm Jebel Ali. This mega project is no longer just a vision. It's an active construction site with a bold promise: larger villas, longer beaches, and lower entry prices compared to Palm Jumeirah. Palm Jebel Ali offers larger beachfront villas around 7,000 to 8,500 square feet, starting from 18.4 million, which is about 2,800 dirhams per square feet. That's nearly double the space compared to Palm Jumeirah, where similar beachfront homes go for about 30 million. The Oasis. This ultra-luxury villa community is being positioned as Dubai's next legacy district, surrounded by serene water, lagoons, vast green spaces, and exclusive architectural design. It offers low-density living at its finest. Current villa offerings starting from approximately 18.4 million, with built-up areas between 8,000 to 12,000 dirhams per square feet. Average of about 1,700 dirhams per square feet. With limited inventory and carefully curated phase-wise releases, capital appreciation is built directly into the development strategy. In fact, early investors have already witnessed clear price escalations from one launch phase to the next. Then we have the Jumeirah Bay Island, home to the iconic Bvlagri residence, one of the most exclusive ultra-luxury enclaves in Dubai. With just a limited number of branded villas and low-rise apartments, demand far outweighs supply. Take the Bvlagri Marina Lofts, for instance. Resale units here are from 28 million dirhams, sizes of about 2,600 square feet, which is approximately 10,700 dirhams per square feet. Then there's Bvlagri Lighthouse, the upcoming ultra-luxury tower by Emirates, where off-plan prices started at 18 million dirhams for a 3-bedroom with unit sizes of approximately 2,600 square feet. That is 6,920 dirhams per square feet. These residences are not just homes, they are collectibles. Grand Polo by Emaar. This launch is Emaar's boldest return to equestrian-inspired luxury living. The 3, 4, and 5-bedroom townhouses and villas were sold out so fast, we didn't even get the chance to breathe, and it was all gone. Starting at about 5.5 million for approximately 2,800 square feet, which is approximately at 1,700 dirhams per square feet. More affordable than nearby ready communities like Mirador in Arabian Ranches 1, where a similar sized villa goes for approximately 9.2 million. What makes this development noteworthy is not just the product, but the positioning. Emaar appears to be creating a new legacy community that merges sports, prestige, and lifestyle in one coherent master plan. Given Emaar's track record of driving capital appreciation through curated launches, Grand Polo is one of the most anticipated investment-grade villa projects of the year. Each of these communities offers a different kind of luxury, but all share one trait: limited supply with high future demand. Annualized growth percent for these communities is expected to be 25% annually. Let's work together to help you make a confident and a profitable decision in Dubai's thriving real estate market. Like, subscribe, or even better, send me a message. I'd love to hear what you're exploring next. See you in the next one. Signing off, Rakhi from Xperience Realty.